Crypto mining, I think this one's really interesting. So crypto mining, in terms of Bank to the Future in our portfolio companies, it was actually one of the first things we did that generated wealth from our investors. We created a company that invested 1/3 of the funds into Bitcoin mining, and it paid daily dividends in Bitcoin at the time when Bitcoin was a price of about $250. It ended up paying actually thousands of Bitcoin to the investors. And some of them have held it all the way through and still going to be holding it all the way through. And so, Bitcoin mining, though, over time, it just became so competitive and more institutionalized. And therefore, it kind of crowded us out of the market as more efficient players that could invest in significantly more infrastructure started to institutionalize the business. We've also got a mining play on the platform at the moment. But what I think is really interesting is essentially we've seen the institutionalization of crypto mining, and we've seen a ginormous adjustment in difficulty rates recently. So the way that the industry tend to work is, for those of you not too familiar, is that Bitcoin is produced every 10 minutes. Originally, it was 50 Bitcoins per 10-minute time frame. And then every 4 years, it changes to 25, then 12.5. And in May this year, it will be 6.25 Bitcoins produced every 10 minutes. Now, what we initially saw when we had the huge correction in Bitcoin as a result of the health crisis is that the times of blocks went from 10 minutes to 13 minutes because the way that the algorithm works is that you need to have a difficulty adjustment in order to get the block time back to 10 minutes. And so there was a time when the blockchain slowed down, the number of blocks changes. But then I think, I haven't done the exact numbers, but if I remember correctly, there was approximately a 16% adjustment in the difficulty rate, which means that those that are still mining essentially have more chance of getting those Bitcoins. Now, there's only ever going to be 21 million Bitcoins, and 18 million of them approximately have already been mined. So it's a game for the last 3 million Bitcoins, and really we're entering into geographical diversification. So originally, the mining industry was dominated by key players in China that controlled different parts of the ecosystem by producing the machines like ASICs that allow you to do Bitcoin mining, and then actually mining themselves. So they could control the market, Bitmain essentially, by being the supplier for those that want to mine with these ASIC equipment. And the chips that go into them, they had chip manufacturing partners. But at the same time, they were mining themselves. So they could really, it created a disproportionate control of the mining industry within China. That obviously started to open up, and you had other players like Canaan come in and produce different types of equipment. But then we started to see, so if you could think about it, with the situation we find ourselves in today is you've got original players like companies like Bitfury, which are mainly associated with mining in Europe. Then you've got companies like Bitmain and many other companies that dominate mining in China. Then you've got other players that have come along like Blockstream, who are looking to do more geographical diversification by becoming a major miner in countries like Canada. And now you've got new players like Layer One that have come along, and they've taken some of the team members that were part of chip manufacturing in Canaan, and major miners like Genesis Mining. And they've started to actually look at how you can take mining, put it in a container, and then put that container wherever the most efficient electricity is. Initially, they decided that Texas was that location, but these units, as it were, these cooling units, these mobile mining units, can really be geographically diversified around the world. So it's a really interesting time. Obviously, US is going through its own challenges right now with the health crisis, but it's interesting to see that some of the that mining can move to more geographical diversification in the US as well. So in terms of mining, it's an extremely the companies that you need to be looking at. They need to have a real edge in this industry. They need to. It's an institutionalized business, and I see more geographical diversification coming once we get through this. But this crisis would have led to many people switching off their mining, many companies switching off their mining, and a drive to the most efficient processes possible. So I see this as more of an institutionalization, more efficiency in terms of that mining, and just the fact is that some people will be mining at a loss right now for the long-term gains, and so it really comes down to cash flow, burn rates, and the efficiencies that company can do. So that's the type of things that I'm thinking about. Other questions I tend to get is there a risk of mining disappearing? Well, thankfully the algorithm adjusts according to the environment. And I've personally been through 90% corrections in the price of Bitcoin, and mining still continues. It has, it is the largest supercomputer in the world by exponentially greater magnitudes that we've ever seen with any other type of supercomputer. So there's lots of room for that, and so it's really a competition for that. And then obviously this also ties into the debate of scaling, because eventually mining needs to rely off miner fees rather than block rewards as well. So all these things come into play, but the mining industry is still as strong. Adam, what types of trends, what types of thoughts can you add to that?
Well, I think what's interesting is when you have a digital commodity, which Bitcoin effectively is the equivalent of oil, but in a digital version of it. If you live in the Middle East and you have, oil wells, beneath you, then you're a billionaire, as at an individual or company or country. So it's the coincidence of where you are located that can dictate essentially the economic model of a company or a country. But what's fascinating is, oil wells don't get discovered every day. And the same with gold. To discover a gold mine is pretty risky stuff. And with Bitcoin, because of having already mined so many Bitcoins, there's only a scarce amount of Bitcoins left. And you've had a period of time, 10 years, for the whole industry to become institution driven. And so how many more opportunities will you get into Bitcoin? You as an individual, practically none. But maybe there are a few more opportunities left, but then that will be it. And it's like discovering an oil well. It's going to require a lot of infrastructure in order to be able to extract the oil and financing and all the rest of it. But the end product is basically free money. But what's fascinating is, you want to get to the source of the digital commodity. And that, if you want to go and create an oil well or gold mine, pretty much forget it. Unless you've got investment banks or certain countries have discovered something, maybe in the Arctic or somewhere like that, then maybe there's an opportunity. But those opportunities are not for everyone. So I think it's, we're in the last days of people even being able to get close to Bitcoin mining. And that, a dip on the price and a dip within, the mining industry creates the opportunity, creates a bit more space for people potentially to get in. But give it a year or two, and it will be locked out, I think.
Yep, and we did see, big players like Peter Thiel, the founder of PayPal, investing in Layer 1 alongside Winklevoss Capital, alongside some of the investors on our platform. So it's great to be able to bring such opportunities.